Welcome to The Explainer. Today, we're diving into a massive paradigm shift in the financial world. We're talking about the transition from rigid algorithmic bots to dynamic, context-aware AI trading agents. We are totally moving past those old fixed rule sets. Now, thanks to large language models, AI systems are actually reading the news, gauging human emotion, and adapting their strategies completely on the fly. It's fascinating.
Here's our roadmap for today. First, the Alpha Arena crypto cloche. Second, rigid bots versus adaptive agents. Third, LLMs as the trading brain. Fourth, building the AI architecture. And finally, managing risks and security. Let's get right into it.
Section 1. The Alpha Arena Crypto Clash.
To see this evolution in action, we just have to look at the recent Alpha Arena live trading competition. Developers unleashed state-of-the-art AI models, powerhouses like OpenAI's GPT-5, Gemini, Grok, and DeepSeek, and gave them each $10,000 to trade completely autonomously, zero human intervention. And the results? They were absolutely striking. Domain-focused, specialized models crushed it. DeepSeek v3.1 saw returns of nearly 40% in a matter of days. Grok 4 followed closely with a 35% gain. But meanwhile, highly touted generalist models like GPT-5 and Gemini, they actually lost over 25% of their capital. In fact, only DeepSeek and Grok managed to beat a simple buy-and-hold strategy during the whole contest. Now, what's really interesting is how these winners actually behaved. They didn't just spam the market with microtransactions. DeepSeek acted like a patient sniper. It only made 6 trades over several days, holding its positions for around 21 hours each. It just waited for high-confidence signals and completely filtered out the market noise. Grok 4 was the cautious holder. It made a single trade but held it for 54 hours, all because its architecture actively pulled in real-time Twitter sentiment to back up its conviction. The generalist models, they basically panicked and completely failed to adapt when market regimes suddenly shifted. So, the big takeaway here, generalized intelligence just doesn't guarantee financial success. A fascinating follow-up analysis showed that while Google's Gemini was a brilliant poker-playing AI, it was a surprisingly weak crypto trader. To win in financial markets, an AI needs domain-specific expertise. It needs specialized training to truly understand the unique rhythms, risks, and contexts of financial data.
Okay, moving to Section 2, rigid bots versus adaptive agents.
To understand why those specialized models win, we've got to define what separates outdated tech from modern AI. Traditional trading bots blindly follow rigid numerical rules. You program them to buy if the 50-day moving average crosses the 200-day average. Sure, they're incredibly fast and disciplined, but they operate in total isolation. If a massive news event drops, like a sudden regulatory ban or an exchange hack, the traditional bot has absolutely no idea. It just sees the price crashing and often makes terrible decisions. AI trading agents, on the other hand, actually understand context. They ingest unstructured news and dynamically adapt their entire strategy the second new events unfold. By definition, a true trading agent acts a lot more like a human trader. It's a closed-loop system. It gathers new data, updates its internal understanding of the world, and then reasons about its next move. It understands why the market is moving, not just how it's moving. Like if Ethereum drops 5%, the agent can read the headlines, realize it's due to a smart contract exploit, and react entirely differently than it would to a normal Tuesday price dip. This evolution means AI can finally process the messy, complex reality that actually drives financial markets. Let's be real. Markets are driven by human sentiment, breaking news, social media panic, and macroeconomic speeches. Until recently, algorithms were completely blind to all of that color. Now, we're feeding that exact unstructured reality right into the AI's decision-making matrix. It's a real game changer.
Section 3, LLMs as the trading brain.
So how do we actually harness this immense power? Well, we assign the large language model 3 distinct roles. First, it acts as an information analyst, constantly digesting massive streams of news and social feeds to generate sentiment scores. Second, it's a strategy generator. Instead of having one hardwired strategy, the LLM looks at the market regime and decides if it should use a trend-following approach, or maybe a mean reversion approach. And finally, it acts as an execution planner, figuring out the logical sequence of steps needed to pull off complex trades. The LLM bridges the gap between raw data and taking action. Instead of getting lost in millions of lines of Python code trying to account for every single variable, think of the LLM doing basic, relatable human reasoning.
If a quantitative indicator says the price momentum is moving up, but the LLM reads the latest headlines and sees that news sentiment is wildly negative, it recognizes a signal conflict. It naturally concludes that the smartest move is simply to hold.
Just listen to how the AI simulates human chain of thought reasoning to weigh these conflicting signals. When prompted, an LLM won't just spit out a buy or sell command anymore. It provides a clear rationale. It might say that while the asset is in an uptrend, external news is uncertain, so it's prudent to maintain a cautious position. This explainability is massive. It means developers and portfolio managers can actually audit the AI's logic to see exactly why it made a specific trade.
Now, to keep this brain sharp and relevant, developers use incredible open-source tools like FinGPT. Financial markets move incredibly fast, right? A model trained a year ago is basically useless today. But training a massive model from scratch, like Bloomberg GPT, can cost millions of dollars and take months. FinGPT allows developers to constantly feed the AI the latest financial data and fine-tune it for just hundreds of dollars. This makes sure the trading agent stays deeply specialized and totally up to date with the latest market jargon and trends.
All right, Section 4, Building the AI Architecture.
Let's crack open the hood and see how this is actually built. The whole system flows logically through 3 vital layers. First is data ingestion. This acts as the eyes and ears, pulling in near real-time streaming data of prices, news RSS feeds, and social media. Second is the AI analysis layer, the brain we just talked about, which parses all that data to formulate a strategy. And the third layer is the execution engine. This is what actually routes the final orders to crypto exchanges via APIs or interacts directly with blockchain smart contracts. Think of this division like a brain and a body. It's incredibly important not to let the LLM do everything. The LLM is the brain. It's brilliant at analyzing unstructured text and generating big picture strategies. But LLMs are probabilistic. They can be a bit unpredictable. So the body of the system relies on traditional, highly deterministic code. This code acts as the hands, executing the exact mathematical API calls securely and making sure the AI's ideas are actually safe to execute. And when you combine the brain and the body, you unlock some incredible capabilities, especially in decentralized finance, or DeFi. A user could simply tell the agent to maximize my stablecoin yield with low risk. The LLM brain formulates a complex, multi-step plan, swapping assets on a decentralized exchange, bridging them to another network, and then depositing them into a lending protocol. The deterministic body then seamlessly executes that intricate sequence across various smart contracts. It's literally doing the heavy lifting for you. What's truly wild is that cutting-edge architectures are now moving to multi-agent collaboration. Instead of one AI doing it all, you spin up a specialized technical agent that only looks at price charts and a news agent that only reads headlines. They literally present their conflicting market arguments to an LLM coordinator. This coordinator acts as a referee, weighing the technicals against the news, and makes the ultimate, highly reasoned final trade decision. It's essentially an entire algorithmic hedge fund team living inside your computer. And that brings us to Section 5, Managing Risks and Security. Look, handing over real money to autonomous AI systems that can literally argue with themselves, comes with severe dangers. But the mitigations are robust. Because AI models can hallucinate or confidently present false information, developers mandate that any insight is cross-verified with hard data checks before trading. To prevent the AI from reacting to stale news, systems utilize lightning-fast streaming data. And to protect against malicious prompts or smart contract exploits, the AI must have isolated execution permissions. Sometimes, they even require human multi-signature approval for massive capital moves. So the crucial point here is that the system's deterministic body must enforce non-negotiable guardrails. Even if an LLM gets confused and suggests putting 100% of the portfolio into a single, highly volatile asset with maximum leverage, the system simply won't allow it. Hard position size limits, strict stop-loss mandates, and leverage caps are hard-coded right in. Engineers also build in fallback behaviors for black swan events, instructing the agent to immediately move capital to cash if market conditions become utterly unrecognizable. We have seen just how incredibly powerful these trading agents can be. By marrying the reasoning capabilities of large language models with the disciplined execution of traditional code, we're stepping into a totally new era of finance. But as these agents become faster, smarter, and entirely autonomous, it leaves us with one final profound question. As AI transitions from merely analyzing our markets to actively trading and shaping them, are we truly ready to hand over the keys to the economy? Thanks for joining me on this explainer. I really hope it brought some clarity to the amazing evolution of AI trading.